Good morning. It's Tuesday, September 26th. This is the Market Minute, and I'm George Corrali, here to make you a better investor. As we enter the last quarter of the year, I'd like to provide you with a market update and our expectations for the stock market through year-end. Equities have had a good run since the election, with the S&P 500 index gaining 22% or so. Year-to-date, the market's up just about 12%. If you're thinking, wow, it seems like the market has gone pretty much straight up, you'd be correct. We haven't had a pullback of at least 5% in some time. In fact, U.S. stocks have gone over a year without a major drawdown. This is only the sixth time since 1950 that the S&P 500 has made it at least a year without so much as a 5% correction, and marks the longest streak since 1996. That streak, which ran from December 1994 through July 1996, saw the S&P 500 index rise more than 40%. So what gives? Research in the field of behavioral finance suggests that emotion, not rational logic, determines stock market performance. Mass psychology identifies the emotions that are driving investors' behaviors. Robert Shiller, a professor at Yale who often appears on CNBC and other financial news programs, has recently written about this phenomenon. The theory goes something like this. Investors don't actually make money by choosing the best companies, but by choosing stocks that waves of other traders will want to buy. So, investing is an exercise in mass psychology. And right now, mass market psychology is in a calm place, which is pushing stocks higher. There are multiple drivers of the current state of tranquility. Deregulation and the promises of tax cuts and massive infrastructure spending are major positives for U.S. businesses and stocks. Consumer as well as business confidence has skyrocketed. Additionally, improvement in underlying economic growth continues. Bottom line, although there is a chance for a 3 to 5% stock market correction as we enter October, the last month of historical seasonal weakness, the psychological preconditions for a big downturn do not appear to be in place. The path of least resistance for stocks continues to be higher. As you know, we are monitoring market conditions and your portfolios closely, and we'll be sure to update you if and when needed. Thanks for tuning into the Market Minute. I'm George Corali. We'll see you back here soon.